You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is Monday, October 18th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It is the top 5 things to know in the market on Monday. First thing to know is pre-open, U.S. futures were pointing to a triple-digit drop. U.S. stock index futures pointing to a sharply lower open as investors remained in a cautious mood following an abrupt market sell-off in the previous trading week. The market shakeout has been blamed on a series of factors, including worries about the impact of a U.S.-China trade war, a spike in U.S. bond yields, and caution ahead of the earnings season. Not helping the mood, Saudi Arabia doubled down on pressure from the West on Sunday over the disappearance of Jamal Khashoggi, the U.S. resident and Washington Post columnist, after he entered the Saudi consulate in Istanbul on October 2nd. Second thing to know today is Bank of America kicks off a busy week of earnings. A handful of Dow components report in the week ahead, along with dozens of S&P 500 companies, in what will be the first big week of the third quarter earnings season. Market participants will focus on numbers from Bank of America, slated to be released at 6:45 a.m. Eastern. Analysts are forecasting earnings per share of 62 cents and revenue of $22.62 billion. The same period last year had 48 cents in earnings per share and $25.34 billion in revenue. Third thing to know today is U.S. retail sales are in focus. Monday's calendar features the biggest economic data point of the week. The Commerce Department will publish data on retail sales for September at 8:30 a.m. Eastern, which it did, which should lend further support to the notion that the economy is on solid footing. The consensus forecast is that the report will show retail sales rose 0.7% last month, after a mere 0.1% increase in August, the smallest in 6 months. Excluding the automobile sector, sales are expected to increase 0.4%. Also on the economic calendar will be the New York Fed's Empire State Manufacturing reading for the month of October. Investors will pay particular attention to the data for any impact tariffs are having on the sector. The U.S. dollar was a shade lower at 94.80. Meanwhile, in the bond market, U.S. Treasury prices were little changed, with the benchmark 10-year at around 3.15%. Fourth thing to know is oil prices rise amid Saudi tensions. Oil prices were higher to start the week as geopolitical tensions over the disappearance of a prominent Saudi journalist stoked supply worries. Benchmark Brent crude oil jumped by $1.43 a barrel to a high of $81.86 before pulling back to $81.05, up 62 cents. U.S. crude was last up 33 cents at $71.67, apparently at the time I read this. Saudi Arabia has been under pressure since Khashoggi, a critic of Riyadh, who disappeared on October 2nd after visiting the Saudi consulate in Istanbul. U.S. President Donald Trump threatened severe punishment if it is found that Khashoggi was killed in the consulate. Investors suspect the latest development could undermine the leadership of Crown Prince Mohammed bin Salman and has the risk of eventually destabilizing the oil-rich kingdom. Fifth thing to know today is Sears files for Chapter 11 bankruptcy. Sears Holdings filed for bankruptcy early Monday after years of staying afloat through financial maneuvering and announced that Eddie Lampert will be stepping down as CEO effective immediately, although he remains its chairman. Our second story today is from Barron's.com. Why Elon Musk is wrong about short sellers. Elon Musk used to think short sellers were tolerable. He has changed his mind. Back in 2012, when Tesla stock traded for a mere $27, the electric car maker's chief was indulgent. Even though they caused me grief, he tweeted, I would defend the right of shorts to exist. They are often unreasonably maligned. After 6 years of reflection, he returned to the subject. The last several years have taught me that they are indeed reasonably maligned, Musk wrote in an October 4th tweet. What they do should be illegal. Musk has obsessed about shorts as Tesla shares bounced down from last year's peak of $384 to Friday's close of $259. You should expect an entrepreneur to hate short sellers. They want a stock to drop. You can use options to bet on a stock's decline too, as long as there have been securities markets, folks have figured out a way to bet on a fall. The bet against Tesla is sizable. Consistently more than 30 million shares short, or about 20% of the outstanding stock. Earlier this year, Tesla's short interest approached 40 million shares. Still, you can't blame the shorts for the slide in the stock. There are always way more longs than shorts in the trading volume for Tesla, or any stock. Shorts makes up just a fraction. Musk's stock is down because investors worry as Tesla burns through heaps of cash and struggles to deliver adequate volumes of its lower-priced Model 3. Our final story today is from CNBC.com. Retail sales edged up amid the biggest drop in spending at restaurants and bars in nearly 2 years. U.S. retail sales barely rose in September as a rebound in motor vehicle purchases was offset by the biggest drop in spending at restaurants and bars in nearly 2 years. The Commerce Department said on Monday retail sales edged up 0.1% last month after a similar gain in August. Economists polled by Reuters had forecast retail sales increasing 0.6% in September. Retail sales in September rose 4.7% from a year ago. Excluding automobiles, gasoline, building materials, and food services, retail sales jumped 0.5% last month. These so-called core retail sales correspond most closely with the consumer spending component of gross domestic product. And that, ladies and gentlemen, is news you can use for today, October 15th, 2018, your Options News Rundown. I'm Dan Passarelli. Trade smart and have a great week.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.